Hey everyone, I want to get you updated on the fast-moving mortgage market. This is my third video to you in 4 days, and with each day, gosh, the world is just seemingly so different than the one day before. If you're like me, I am scouring headlines for the silver lining and a good news story. I'm sad to say that this one that I'm delivering you is not one. Mortgage rates have not taken a turn for the better. Still don't think it's time to give up hope on that possibility, but they are at their highest levels that we've seen in almost a year. And I want to kind of share with you why. So this morning an article came out in one of the mortgage digests that I read is yields spike and will they come back? So the yields that this is referring to are treasury yields. I spoke last week about how mortgage bonds had gone up while treasury yields had gone down, which normally they kind of go in unison with one another. And the good news is they have come back in unison with each other at the moment, but it's not because mortgage rates have come down to meet treasury yields. Treasury yields have come up. So this blue line, I shared this with you last week, is the spread or the difference between mortgage-backed security yields and 10-year government treasury yields. And it hit this spike, and I said, hey, this means that mortgage rates probably have 0.5% to fall. Well, that did end up coming true. The reason why the blue line fell back to its kind of more normal period is because treasury yields went up. And they went up for a pretty straightforward reason. The government is prepared to try to do what it can do to bail the economy out this coronavirus crisis. So the Senate and the House are trying to work through upwards of $1 trillion stimulus package. And what that does to the economy, I don't know. I mean, as a society, we output $22 trillion of product last year as an American economy. So $1 trillion equates to a little over a 2-week Band-Aid. So $1 trillion has a lot of zeros. How much impact it has, I don't know. But the reality is the federal government doesn't have a $1 trillion piggy bank. We're not dipping into a savings account in this bailout. We are borrowing money. So if we're going to be flooding the market with treasury bonds to sell, there's going to be an increased supply, which pushes the prices of them down, which makes yields go up. So I don't see this spike going back up again, but at the same time I don't see mortgage rates falling in the immediate future unless treasury yields fall as well. There are a lot of fear-driven headlines. This is a screenshot from 5 minutes ago. Hell is coming, Dow tumbles, layoffs hit restaurants. The red one here, Senate has the votes to pass coronavirus relief plan. So it does seem like this stimulus plan is going to take shape in one way or another. So this probably means that treasury yields will remain at their current levels unless they get battered down again. The way treasury yields get battered down from here on out, you're not going to like the sounds of this, is if more bad news comes from this coronavirus and people feel like they've got no other choice but to put their investments in government bonds as opposed to other places. Let's hope it doesn't get worse than that and there's a run on banks and people just kind of go to cash. But I don't think we're there yet. But we are definitely not at a point to where we should be getting excited about refinancing at rates of 3% or below. Still gather your application documents. I know a few of you have sent them to me this week. I've worked on most of them, but be patient with me. But continue to, if you haven't done so, to get an application going with me. If you're working home remote or if you've been sent home, maybe you've got a little bit of extra time, well, here's a way to be productive with that. At the bottom of my email signature, there's something called Document Guardian, which is a professional level of Dropbox. Send me documents that way. We don't need to meet face-to-face. Give me a call, too, if you've got any questions or concerns about what we do from a refinance position. In the grand scheme of the world right now, refinancing at a discretionary level is probably pretty low on your priority list. But in my world, it's the only thing that I can do and control in what is becoming an increasingly unpredictable world. So hopefully you're listening to these. I enjoy doing them for you. It's kind of my only purpose right now. There's not a lot of people looking at buying homes or selling homes, but this refinance thing is something I can, as a service, kind of still find some value in. So again, hope you're enjoying them, and I'll be in touch on an as-needed basis, but feel free to call me if you want to chat. Take care.